Happy New Year's everyone. Today we're going to be doing something a little bit different. We're going to do some storytelling about how I missed 80 bags of profit. Now it'd be really nice to make a video on how I made 80 bags, but I think there's a lot of lessons to be learned in this hindsight, going back and analyzing what went wrong. Now this was a chart setup that I've been looking at for maybe about 3 weeks. So I've been preparing for quite a while to trade this stock, and this was Afterpay. Now, you guys might know I'm not an options trader really. I probably do up to 5 trades a year. I really look for the A+ setups for stocks that are in like the ASX 20 sort of range for market cap, because it's the only way to really make good profits. And I'll typically make anywhere from maybe 1 bag to 6 bags of profit from like a $500 or $1,000 position. So I don't really risk too much. And of course, some of my options do expire. I don't like make money on all of them. But the risk to reward is really good. So that's why I look for an A+ setup. And that's why I only risk $500 to $1,000. So digging right into it, this is Afterpay. This is the daily chart setup that I saw back in December. And if you look at my video from maybe about 2-3 weeks ago of my top chart setups, this is number 1. And that's a rally into a sideways consolidation at the highs, right? There's very little pullback, if any at all. And then it ranges. Now, a lot of people look at that and go, I don't want to buy the top. But this is one of the few situations where buying the top is ideal. The likelihood of it breaking out to the upside is very high. Now, I was actually waiting for the breakout. I didn't want to buy beforehand because you never know how long this is going to range and you don't know if it's going to sell off. So I wait for confirmation before making the trade. And before I go any further, I just want to say I'm not a financial advisor and you shouldn't consider any of this as financial advice. This is just a story about a trade that I made. Now, so this was the rally into a sideways consolidation, and we can also see from top to bottom, I was looking at the 138.2, which is 119.50. That was my target, my short-term target. If this range was going to break out, that was the breakout target. It also helps that some brokers also had a $120 target for Afterpay as well. So I thought, brilliant, it kind of lines up with what the brokers are saying as well. And that was effectively my target when this broke out. So on Twitter, I posted early December, I believe we'll see 120 this year. And that was based on that technical analysis as well as the broker reports. And this is what I tweeted out the day it broke out. That was what I was looking for. I also mentioned it in my private Discord as well. At 129 on December 11th, 2020, I want $112 calls on Afterpay with short expiry. So this is the trade that I tried to make. It was stock ticker APT K98, or that's the options ticker. I tried getting 44 options at 10.5 cents, and there's 100 shares per option. So that ended up being, let's see, 44 times, so 44 times 100 times 0.105. So that was a $462 trade. With brokerage on top, it would have been somewhere in the ballpark of $500 flat. So with that position, I actually didn't end up getting filled. Now, if you saw my options trading video, there is a spread between the bid and the ask. So you got the bid here and the ask here. And they kind of move along with the price. And the idea is that when trading options, the ideal spot to buy is the midpoint between the bid and the ask. So if there's, for example, 5 cents on the bid, 10 cents on the ask, you want to put at 7.5 cents the order, right? That's typically where you'd put the order if you want to buy or sell an option. Now, if you don't get filled, usually put 1 tick higher, you pay a little bit of a premium, and then you'll almost certainly get filled. 90% of the time you'll get filled. In this situation, I put in 10 cents was the midpoint. I didn't get filled, so I put 10.5. Now, Afterpay was selling off towards the afternoon when I was looking at it, so I left my order at 10.5. And of course, as the price goes down, the bid and ask goes down on the options as well. And when I looked at it, it was 11 cents. The market maker's price was 11 cents, 1 tick away from my 10.5, because it goes in half-cent increments. So 10, 10.5, 11, 11.5. And I sat there and I was just kind of dumbstruck by why I wasn't getting filled, because I was right next to the market maker's price. And I didn't pay up the extra half a cent because I had it ingrained in me that I should never pay the market maker's price. It's a bad idea. I always want the midpoint, maybe plus one tick. So I missed out on that trade. I left it there. I thought I'd get filled for sure because I was well beyond the midpoint. The result was that we zoom in, it broke out, and on expiry day, it hit over 112. I think 112.58. So if you guys are wondering what that 10.5 cents or 11 cents would have looked like, that's about $8. So that's roughly 80 bags, just under 80 bags of profit that was missed out on. That was a short-term expiry trade, so I would have got in, or ideally got in at this point here, 11th of December, and expiry was 17th of December, and it happened to hit the 120 and a little bit more perfectly. So how you calculate that is at 112, which was the strike price. So that was the strike price of the option, right? I don't want $120 strike price, even though that's my target. That's not what I want the strike price to be. I want it to be less, because the idea is at $112, which is the strike price for the calls, minus $120, which is actually where it ended up going. Each option is roughly worth $8. It's not a perfect calculation. Obviously, you got to factor in the premium, you got to factor in the market maker as well and what they want to pay for it, but roughly $8. Because it also did go over 120, so maybe 120 and 70 cents, I believe it was. So $8 is a pretty reasonable price for those options. So from 10.5 cents, 10.5 minus 800 cents divided by 10.5, that was about just under 80 bags of profit that was missed out on. So look, the lesson here is, I guess, stick with your conviction for trading. I should have paid that half a tick in hindsight. That would have been really nice, because that was about, so what's that? So 468 times, what was that, 75? So that was about a $35,000 trade within 3 or 4 trading days that I missed out on with $500 of risk. So that chart setup, everything was set up for me. I just didn't push that order in. And the unfortunate thing is, as well, is in the morning when I tried catching the initial breakout, I actually had an order at 7 cents, which is the midpoint. So it would have been a lot bigger in terms of multiply for the bags. But you know what? It's always fun to talk about the one that got away. But the lesson here really is stick to your conviction, I guess. And that was a trade that I had the most conviction on in quite a long time, and I just didn't pay up. I was stuck in the mindset of not paying the market maker's price, and I guess I paid the price in hindsight. So it's always good to have options as a tool, so understanding and learning options. So when you find these perfect chart setups, these A+ setups, and wait for them to execute them at the right time, that it may be worth considering to learn options, just to have that as a backup for when you find something that's rallying really hard. Say you got an oil breakout, let's say Woodside Petroleum at the moment, you see the breakout on oil, and you see this horizontal here, and you see it break on that day. You can get really good bags. Someone on my Discord ended up getting about, I think, 5 or 6 bags of profit from buying options on this day. So there's a lot of room, a lot of potential to make profit if you have the patience as well. And please do hit that subscribe button. I'd appreciate that. And so look, guys, if you're interested in a trading community that discusses these things, I have a public Discord. I'll put it in the comment section below, in the description below. I also have a private Discord where people who are very experienced, have anywhere from 5 to 25 years experience. We trade on a regular basis for the last 5 years together. So we've got that kind of community where you can, I guess, bounce ideas off. It's not a service for stock tips, right? We don't provide financial advice. We don't provide any sort of, any kind of stock tips or anything. We just talk about what we see on the markets, what we see pre-market. Got a bunch of short-term traders, got a bunch of day traders as well. So it's a bit of a mixed bag of people in the community. So if that suits you, if you're interested in that, hit up Patreon for that one. Otherwise, if you want to feel like you want to join a much larger community, or if you want to start somewhere, if you're really new to the markets, maybe join public Discord. And that's a community of about 1,300 people at the moment. So it's very active. It's There's no toxicity. It's a great environment, and I strongly encourage you to join. So guys, have a good one.